Well, so thanks for joining us on the business segment. I'm Naniku Asari, looking at our first story talking about the Eurobond listing on the GSE. Government has listed the second Eurobond it secured on the Ghana Stock Exchange. The first ever listing of Eurobonds by any African country on its local exchange will provide a platform for companies to raise capital and the investor community, both local and foreign, also to invest in the equities and bonds on the local bourse.
Beyond working to improve the availability of bonds as options to raise capital, it is important to know that there is a ready market for such opportunities by institutional investors. For instance, the recent pension reforms and subsequent introduction of private pension funds has led to the accumulation of pension funds that have to be invested prudently in various financial instruments, including the local bond market, to protect future incomes of pensioners. We anticipate that the deepening of the local bond market would contribute significantly to the development of our financial markets.
Right, so that is just a bit of it. We'll bring you the full detail in our subsequent bulletins. We're still looking at more stories this afternoon. We're still staying and we're talking about steel producers. And steel producers in the country have backed government's ban on export of ferrous scrap metals as a window of opportunity for the alien steel industry to grow. Now, they also downplayed fears of scrap dealers who have alleged the move will only cripple their business.
Exactly 2 months into the enforcement of the ban on export of ferrous scrap metal, steel producers say the move is yielding results. After a long tussle of implementing the policy, Ghana's 5 major steel mills producers say the business climate is now favorable. Using 85,000 tons of scrap metal monthly, producers say production capacity have doubled within the period. But the scrap dealers have alleged that many more of the metals are still locked up in stock, hoping that the ban could be reviewed for exporting business to bounce back. Manufacturers are also of the view that lifting the ban will only give way to the imminent collapse of the local steel mills. The world price market for scrap have dropped, and Ghana is not exception, but this is also another concern to scrap dealers, pointing accusing fingers to producers for unfair pricing.
Steel market is falling down. We may have to change it. We have agreed with the last meeting with the minister that the maximum credit we should observe is 21 days. We are trying to match that.
In other stories, construction work on the 185-kilometer Kumasi-Prestia transmission line is expected to resume in the last quarter of this year. A $1 million technical training program is underway for 80 Ghanaian engineers funded by the Korean government to manage the lines.
The transmission line will connect to the West African Power Pool project. On completion, it will add up to the existing Kumasi-Takoradi and Tema-Kumasi transmission lines. The Korean government is investing $1 million into training 80 Greco engineers on managing the 33 kV lines and system when completed. Engineers will be trained on transmission design, SCADA and technical control within 2 years period.
This course is for Ghana electric engineers. This training is composed of 3 kinds of engineering parts. First, tower design, installation, coordination, and circuit design.
The first African power training school is expected to be built in Ghana as part of the ties between Ghana and Korea.
We believe that the government of Korea also have some investment opportunities that they're looking at in Africa, and we're very privileged to be one of the choices that they've made that will help us in our capacity building effort. It's a good start, and we hope to sustain it in the years ahead.
And onto the labor markets now. Government has approved a 10% increase in base pay for public sector workers on the single spine pay policy. Now effective from September 2013, all public sector workers would receive a minimum of 5 cedis and 32 pesos as base pay. Secretary General of Organized Labor, Dr. Kofi Asamoah, spoke with my colleague Daniel Upoko.
The 10% is an increase over the 2012 figure of 4 cedis 84 pesos. Government is expected to commence implementation immediately.
Implementation of the 20 base pay is the effective date of the implementation. It's 1st January 2013, and that the new pay levels will be effected in the September pay salary. That is to say that September's salaries would take account of the new implementation of the new 10%.
The base pay is the minimum government has to pay to public sector workers.
The minimum wage is the least below which nobody should take in the country. So the base pay is a percentage above the minimum wage. The general agreement is that the base pay of the public sector is always above the national minimum wage.
Already, government has expressed worry over increase in its wage bill. Currently, the wage bill is hovering around 70%. Government and organized labor are to convene a meeting on Tuesday, September 3, to discuss schedules for payment of arrears.
What we could not conclude on, and which a meeting has been scheduled for Tuesday, is the back pay, or what is called the differentials between between January to August, and that is what we have not finished with the negotiations, and we're going back on Tuesday to continue the negotiations.
Right, so later at 4:30, we'll bring you more updates on the forex and commodity markets, also what the business community thinks about the Eurobond listing on the Ghana Stock Exchange. That will do for this afternoon. I'm Nani Kesari. Good afternoon.